Next up, it's Atlantic Lithium, who until last November were IronRidge Resources when the company split into two strands, gold and lithium. Since then, Atlantic has grown the flagship project Ewoyaa in Ghana, which is a 255,000 tonnes per annum lithium spodumene pegmatite discovery, and it's soon to be Ghana's first lithium producing mine, and it's fully funded to production. Share price is re-rated, and the oil business has a market cap today of around a stonking £270 million. Based on the recent pre-feasibility study, Ewoyaa has indicated life of mine revenues exceeding 4.84 billion US. That's a very large number. Neil Herbert, chairman at Atlantic Lithium, joins us from London. Greetings, Neil.
Greetings to you, and many thanks for having me here today.
That I can say is a true pleasure. I'm really interested to catch up with you as a company and Atlantic, because it's been a year and a half. You've been up to such a lot and have really consolidated that mine prospect at Ewoyaa, haven't you?
Very much so. I mean, it's been a very exciting year for us. Obviously, we've achieved a lot. We've done our PFS study. We're busy moving forward to take the project to mining the year after next. Obviously, we're in the middle of a lithium boom, so this really is the opportunity. And I think Liberum, one of our brokers, has set out that this is a best-in-class project. So if you're interested in lithium, you should be interested in Ewoyaa.
Fantastic. I shall leave you to give your presentation now, Neil.
Thank you very much. Okay, so taking it from the top, and many thanks for that introduction. So Atlantic Lithium, we are listed on the ASX, we are listed in London, and as has already been said, we have a market cap of around 275 million today. What are we doing? We're in the business of taking the Ewoyaa lithium project to production in Ghana. It will be Ghana's first lithium mine, and we're very proud to be the first in country to take a project forward. To give a little bit of a backdrop to where we are entering a very changing situation in terms of lithium demand today. So obviously the key change here is electric vehicles. So electric vehicle demand has fundamentally changed the outlook for lithium, and we moved from a very low base of production historically to what looks to be a massive increase in demand, and indeed is already occurring. In terms of the outlook to the end of the decade, what we expect to see is a 6-time increase in the need for electric vehicle batteries. And indeed, the numbers out there, estimates from Benchmark Minerals, who are the specialists in the space, are another 59 new mines in a decade. Now, any of you who have invested in the sector, you'll appreciate that the average time it takes a mine to get to production is 10 years. So any production that we can expect to see in that time, frankly, needs to be projects that have already been identified. We are very fortunate to have one of those projects. We've been working on this project now since 2016, and as a result of which we've done a lot of work in terms of taking it forward, and indeed looking forward to being cash flow positive by the end of 2024. So one of those things that are really good to point out at the moment, in the middle of the screen there, you'll see the last auction price, which is over $8,000 a ton for lithium concentrate. That's a phenomenal price, given that our average cost of production is well under $300 per ton. So you can see the potential sort of gains that you can achieve. We can't predict what the lithium price will be next year or the year after. What I can say, having worked in the industry for 25 years, is where you find yourself in this situation where a fundamental change in demand has occurred. The sector is hurrying to catch up, bringing on new supply. And as it takes so long to bring on new supply, you've got a supply constrained situation and prices remain high. To be frank, a $2,000 lithium price would be a fantastic price in this market. So being over $8,000 is truly wonderful. What have we got then? So at Ewoyaa, you'll see that sets out our resource statement today. At the beginning of the year, we had around 20 million tons. We increased that to over 30 million tons. We're in the business of increasing that again. We're also in the business of increasing the amount of resources that are moved up to reserves. So we've been doing an ongoing work program. You'll see on the right-hand side of that slide a nice picture there. And this is really the holy grail of hard rock projects. This is large crystal spodumene. So what's really nice about this product, it's very low in purity. Talking to the converters, this is really what they want to have. It is ideal for their kilns. It's the best outcome in terms of what you can do in producing a battery. The pre-feasibility study, well, we did this this year and we completed it in September. We're now busy moving forward with the definitive feasibility study, which will include around the middle of next year. As it stands with this PFS, you'll see there are some really astonishing numbers. We made some very conservative assumptions regarding the lithium price. We used an average price of $1,360. That's obviously substantially below where the market is today and where it has been recently. But even at that relatively low number, the numbers are really quite incredible. So you see an IRR of 224%, a payback period of 5 months. Yes, I've worked in the industry for many years. I've worked on some great projects, but normally we express payback in years. So this is really quite something. And with the existing resource, we've had a mine life of 12.5 years. So that's already a substantial period of time. And as you will see as we go through the presentation, there's lots of potential for growth in that. On those numbers, it throws off an EBITDA of $250 million a year. So that's very healthy considering our CapEx is 125 million for the project, and we have funding for such, as I will talk through in a minute. In terms of the project, what's really nice is, I always say this is nature's gift. We have this very broad intersection, so this really is easy mining conditions. And what has happened over the life of this project is the amount of coarse grain spodumene against the fine grain has increased, which is the ideal scenario. So the coarse grain is the most valuable, and that feeds into our main product line. So if you look at it here, we have 3 products. Obviously, nearly all the value is tied up in the spodumene concentrate, but we also have DSO fines, which is an additional item which adds value. In the studies that we've done to date, what we have actually done is put them in at a very low value. So actually there is a market for DSO fines at the moment, which is around 10 times the price of what we put in the model. Obviously, it could be a nice additional income for us, and there is potential for this to add revenues before we start the main plant in 2024, which is something that we're looking at now. There's also another important byproduct, which is feldspar. There is a local ceramics industry, which we believe we could serve with this, and obviously to add value locally as they'd be able to expand their ceramics industry. So we'd be very happy to be able to provide that local industry if we can. There is indeed an international market for it as well. One of the things I have to highlight as it stands today, we have 50% of the offtake, which we have agreed to sell at market price to Piedmont. The other 50% has remained uncommitted. And going back to that first slide, we looked at the lithium. It's highly valuable today, far beyond the actual market value of the product, because people really need supply. Over $150 billion has been dedicated to these gigafactories, and they are all now looking for supply. I was at a conference in LA recently in which they highlighted that the real problem now is not the commitment to build the factory, to build these plants, but actually to provide the raw materials for them. And there's nothing more acute, frankly, at this point in time of where the lithium supply is going to come. So we are very well situated in that respect. Looking at where we are within Ghana, this is a really nice situation. As you look at many projects in Africa, you'll see they have considerable distances to be able to take their projects and take their product to port and indeed over international frontiers. This is about as good as it gets. We're situated on the coast. We're 100 kilometers from Accra and 110 kilometers from Takoradi. A very nice situation. So what we have is very good infrastructure, and we'll come back to that in a minute. But what's really nice here in Ghana, and the things I really like about Ghana, is it's an established mining jurisdiction with a long history. It's a very well-developed country with good infrastructure. So here is that infrastructure. So we sit just off the main highway here that takes us to that deep sea port. It is a paved road, no problem taking product along it. We actually have the grid power running across the site at the moment. So we actually have to move that grid power a little bit off to one side. But given the nature of the deposit, being it all spodumene, it actually requires very little in terms of power. So compared to other projects which require to have a flotation circuit, which require more power, more energy, more tailings, this project is very straightforward and has a low power requirement, and it sits right next to the site as it stands today. And that port that we've been looking at, we actually had people out in the looking at the report the week before last. Very well served for industrial minerals. We don't really have to do anything there in terms of in addition to that port. And having worked on many projects in Africa historically, that's a real boon. The last comment there is in terms of the skilled labor market. And the reality is Ghana has a long history of mining, and as a result of which it has a number of universities which serve the mining community. If you work around the world in the mining industry, you'll often run into Ghanaians working in Australia or the United States. So we have a lot of engineers, a lot of geologists working with us, and they are very pleased to be working with us because unlike most of the projects that tend to be in the north of the country, you can actually work from home, as it were. You can live in Accra and actually drive to site reasonably, maybe stay at site during the week or even return home. So it's very popular with the Ghanaians. We were recently looking for a post in which we had over 500 applicants and many skilled applicants among them. In terms of Piedmont, Piedmont's interest here is obviously the offtake. They are building 2 hydroxide plants in North America, and we have given them 50% of the offtake, which they can buy at market on the basis that they earn into 50% of the project. In doing so, they provide us with over 100 million, 70 million of which is devoted to the capex. Any over and above the 70 million is shared 50-50 between Piedmont and ourselves. Obviously, we put forward a number in the PFS of 125 million. So people will be wondering where that extra money is coming from. At this moment in time, we have about $15 million in the bank. In addition to that, and as I have said earlier in the year, we've been in discussions with the Ghana Sovereign Wealth Fund. Ghana Sovereign Wealth Fund invests in mineral projects in country. They've been doing extensive DD on the project. We saw them the week before last. They were very happy with the results of that DD. And I would hope by early next year, we would see and come in as investors. And obviously, it's very important to have them on board as local stakeholders. We continue to work on the project. So we did 47,000 meters of drilling. We've actually reported now about 36,000 in total. So we have about another 10,000 meters of drilling to come. I'm sure some of the viewers will have actually seen the recent results, and more of the same. And more of the same is very good here. So you're seeing yet more very long intersects of good grade and very consistent grade at all coarse grain spodumene, which has been fantastic results. I think there are a couple of highlights I'd pull out for that. We actually had some very sweet spots in the main deposit. Some of them are reported here, but we actually had ones we put out even more recently, which were all over 6%, which is very nice, which obviously may add to the average grade on the deposit. And the second one was it actually goes deeper than we originally thought it would. So we've actually had longer intersects at depth than we were expecting. So 2 things we expect to come out of that. Well, first of all, we need the remaining 10,000 meters of drilling to come out the lab. We expect to have half of those before the year end, and hopefully the remainder by early next year. And that will feed into a new resource statement. And what you can expect to see there is moving from partly moving up for the mine plan, so effectively putting more into reserves, but also increasing the overall size, of which there is plenty more potential. So here we are in terms of that exploration upside. And as you can see here, we've actually worked a very small part of our overall license area. In fact, it's only around 2% so far. We have a very good exploration team. Obviously, this is the same exploration team that identified the Ewoyaa main and the surrounding pegmatites that we've identified, but we have a lot more area to work on. They're working systematically across that area to identify new targets, and indeed you can see there the red spots on that are indeed new targets that we're generating all the time. So while we have 30 million tons today, I would hope with the update in the resource statement, we would add a good amount to that when we put that out at the end of Q1. And from that also, there's plenty of upside again. So we talk very speculatively about there being perhaps 60 or 100 million tons across our license area eventually. We're not waiting for that. We're very much in the business of taking this project to production on a good timeline. One of the things that's very important to us is maintaining a good relationship both with the community and with the government and all local stakeholders. We've actually been blessed by very good relationships. We had another community meeting about 10 days ago, very good meeting with the local community and indeed with the government that same week. The government's very keen to see this project progress. Obviously, Ghana has a very long history in gold mining, but wants to diversify into other minerals. They very much welcome this project, and they also welcome the idea of entering, if you like, the mineral space for EVs. The The local community very much enjoys the employment. So we're overwhelmingly a Ghanaian company. We have very few expats. I think we only have one expat currently working in country. The rest of it, as I mentioned earlier, we have lots of highly qualified staff are Ghanaians, and indeed from the local community wherever possible. So we are very much committed to continue to contribute to that local community and help with their development. But at the same time, obviously, the Ghanaian government very pleased to see potential new tax revenues, which will be substantial coming from the project. So here's Ghana. It sets up the regime as it stands today. Obviously, the government gets a very significant stake in what we do in terms of tax revenues, and that's very important to everybody involved. But again, I'd like to highlight the fact that it is a very good mining jurisdiction, 100 years of mining history, and indeed a very highly qualified workforce. What's also nice is because they're used to going through the permitting process, that the government actually is proactively involved. The sovereign wealth fund of Ghana, who we've been talking to, that I mentioned earlier, also very supportive in seeing projects that they invest in get developed. So obviously that's very helpful too as we take the project forward. So in terms of the company today, as we set out earlier, this is the market capitalization. We have a strong cash position, and obviously the continued funding from Piedmont helps us a great deal. We look forward to further funding from the Ghanaian Sovereign Wealth Fund, assuming that they make the final investment decision. Interesting to look at our major shareholders. Our biggest shareholder is Assor, and some of you may be familiar with the group. It's a major mining group in South Africa. They've been long-term investors. They provide us a lot of additional expertise in terms of their experience in mining, so we very much welcome their involvement. When we put out the PFS, they actually assigned somebody to, if you like, stress test it every which way. And the comment came back from the engineer who was assigned to it is that, I couldn't break the model, it's too good. And you will have seen just in the last 2 weeks there, Assor increased its stake. So I take that as a big vote in confidence from them. Obviously, Piedmont, which is our off-taker and our partner, that's owning the 50% of the projects in there. I think importantly also, you can see the decarbonisation fund there also taking a stake. So that's happened this year. I think one of the things we can expect to see over the next year is as we continue to decrease the project, de-risk the project, and bring it closer to production, is actually see a larger institutional interest in the register. So in terms of the board, obviously we have a very experienced team. I myself have worked in the mining industry for a very long time. So it's a bad thing. We also have Stu Crowe as our senior non-executive director. He's also the chairman of Lake Resources, another major new lithium company. We have our exploration team, which is highly experienced, which made the discovery, which continues to expand our base on those exploration licenses. But one of the things I would like to pick out, I think is very important to us, is obviously we're in the process of transforming the company from exploration to mining. We brought in Keith Muller. We're very lucky to have Keith. I'm delighted that he joined us. He has previous Africa experience, but much more importantly at this point in time, he's actually run a lithium mine, which will be very similar to the setup we have at Ewoyaa. He was running the Mount Catlin mine in Western Australia, and that's a big plus to us. So I'm delighted to have him on board. So that's where we are today. Obviously, the project is going very well. We have a significant resource, which you can expect to grow. You'll see results of that coming out next quarter. Indeed, as we move through to the middle of the year and the completion of the DFS, you'll see the different stages coming forward and the important steps we have to take in terms of making sure the project gets to production on a timely basis. We have a strong ESG credentials. Obviously, the nature of the deposit, its situation means that we have a very low environmental footprint, very small footprint, which is an advantage in itself. There's excellent economics. And I think probably the final comment I would say is that we're very well funded. But on top of that, there's a lot more we can get out of this deposit as we go on, both in terms of growing the resource, which could extend the mine life, but also potentially increase our annual production as well. So we're currently putting a throughput of about 2 million tonnes. One of the things that we can look at next year potentially is increasing that to 3 million tonnes. It wouldn't add significantly to the capex, would obviously add to the economics. Not saying we'll go down that road yet, but it's something obviously very tempting for us to look at as we move forward. And I think that's about it. I understand we have lots of questions, so very happy to take those questions now.
Yeah, lots of questions indeed. I think we should just kick off with what's probably a relative easy one for you. How big a lithium mine do you think Ewoyaa might eventually become?
That's a good question. I suppose in terms of size of the deposit, as I set out before, I mean, it's speculative. We're currently about 30 million tons of reserve and resource. We would hope in the next resource statement we'll be increasing that, 3, 5, maybe 6 million tons more. In the longer term, we think the project area has a lot to offer. So very speculatively indeed, and just throwing it out there, it might be 2 to 3 times as big as it currently is. So that's big in itself. The other side is the bigger.
Would you like to do that by developing resource and then into production, and then it becomes self-servicing?
Oh, absolutely. So, like all good mines, you continue to add to the resource as you go along. So we don't want to wait to get to a much bigger resource today when the opportunity is to take production and achieve cash flow earlier. So we do that in parallel. We continue to develop the exploration side as we move forward. The other side, as I mentioned, is now we're getting to the point where the resource is growing, and we'll see how that comes out in the next resource statement. We could look at higher production as well. So there's lots of potential there, and Keith Muller, our COO, who you brought in with all his mining experience, will be brought to bear on that.
And I'm sure you've been asked this many times, but at a very big, at an overview level, how do you see the funding for the project developing? Just you deal with this every day. Just break it down for us.
So as I said earlier, if you look at, we have about $15 million today. We have some ongoing funding from Piedmont. They provide 70 million capex, plus 50% of any overrun on that. So if you look at it today, the current estimate on capex is about 125 million. So potentially we could be called on for half of that, which is what, $27.5 million. We have 15 million in the bank. As I've mentioned, I hope to see the Ghanaian sovereign wealth fund come in, and we have deliberately avoided looking at any other funding options until they make that decision. I was with them 2 weeks ago. They gave the thumbs up on the DD that they've done. The same way Assol got an engineer to look at the project. They had an independent review and an internal review. And they initially said when we gave them the numbers, it looked too good to be true. But actually at the end of it, they said, well, actually it turned out to be true, which is very nice. So we're hoping to see them in. Even if we didn't go down that road, we do have some other funding options. Obviously, with 50% of the offtake uncalled for and a scrabble, frankly, by the converters to find new supply, we could enter into an agreement on that side, provide funding if we needed to.
Okay, so Robert Churchlow asks the obvious question: can you please put to bed suggestions that you're looking to do a share placing? And much of what you said, puts it to bed. But on the other hand, it is
very direct question.
It's for you to say.
So as I've said, the placing that we would do would be for the sovereign wealth fund, but I have no intentions today to do a placing anytime soon beyond that. There's just no need. We've got money in the bank. It would just be frankly rude to go out and raise money when we don't need to.
Okay, and that leads us to, you said before we came on air that the two difficult things about any project are financing and licensing. Clay Sinclair asks the licensing question. His biggest concern is the mining license, he says. So what reassurances can you give Clay that this is progressing well, and could it possibly be granted earlier than expected? Are licenses ever granted early?
Well, they do sometimes. What's very nice about Ghana is that it goes through these permitting cycles, I won't say all the time, but regularly, because it's a mining country. So they're very systematic in their approach to it. Again, I was out there in Accra 2 weeks ago. Tremendous amount of support from the ministry. Obviously, they've gone through the process of interrogating our application for mining license, which we put in September. They've come back with quite detailed comments upon that and questions. But frankly, nothing that we can't manage. We expect to answer those. I think we're answering those next week. I don't want to commit the team overly, but frankly, we're very confident we can address those properly. I must say, both the ministry and indeed the local community have been very supportive of the project. So far, so good. I must say, I can't see any problems with it. It's a very straightforward project. We don't have any sort of toxic waste issues or any of those sorts of issues. It's a small footprint. Can't see it being done any sooner than September, but I'm not expecting to be much later either. So there are several bits for licensing and permitting that we need to work through. Obviously, the environmental aspect is ongoing. We would expect to complete that next September. Perhaps the mining license might come in earlier and then we get our license to operate. But so far, so good. It's a very good mining jurisdiction. Not expecting problems, but we take it seriously. We have a whole team working on this.
Okay, Clay's the second part to his question. Now, this is a slightly more of a curved ball. If the Ghana Sovereign Investment Fund do take a share stake, and it would be a delight for you if they did, at all levels, it would be a fantastic thing to happen. Does that pretty much rubber stamp the mining license? It's a cheeky question, I know, but there you go. It's not my question, it's Clay's.
Well, they are obviously these are. While at the end of the day, this all leads into government, they are separate divisions. It must be said, though, I think that the Sovereign Wealth Fund, where it has a very rigorous process itself regarding its investments, and so if you meet the standard that the Wealth Fund has, then to be frank, it's very supportive in terms of getting the mining license done. I'll put it that way. So their endorsement, frankly, is a sign that they believe that there won't be an issue with permitting. They don't invest in projects that they don't think are going to get to production. So do consider it, I think, a vote of confidence if they make that decision and that comes out early next year.
Okay, that's great. Let's turn to, I suppose, the other great conundrum, the price of spodumene concentrate into the future.
Oh, very hard.
But it's a fascinating one, isn't it? Because all the experts are arguing at the moment. Goldman Sachs are saying the price is going to drop, and forgive me, I've forgotten the long-term player who's been pricing this forever, who totally disagree with them and say it's going to be strong for much longer. Where do you stand on all this?
I guess, experience is a terrible thing, but I have some. So in the early noughties, obviously, really at the turn of the century, no one was expecting the boom to occur in China in copper and other minerals. And obviously, this did amazing things. I had a copper mine at the time. I was working with Antofagasta, and you can see the amazing profits that it generated. The reality of this industry is this. It's very hard to bring on mines quickly. 10 years as an average timeline is entirely realistic from first discovery to taking to production. In the case of lithium, if you compare it to copper or nickel, you don't have a lot of projects that are being looked at in the past. So the scrabble to bring new production forward is very much on. 59 new mines is the estimate the benchmark minerals have out there. The idea that 59 new mines could be brought on in a decade is mind-boggling. I just can't imagine that it will be happening. So what I do expect is that there will be new supply. I wouldn't want to predict what the price will be on any given day, but in a supply-constrained sector, the price is high, and it will remain high. $8,000, I wouldn't like to say. Maybe it will go higher, maybe it will go lower. But to be frank, $2,000 price would be an amazing price for a project like this where the OPEX is so low.
Yes, you'd still be going, that's fine, thank you.
Absolutely.
Okay. What's the grade that your spodumene concentrate falls into? I understand you get battery grade, you get aggregate grade. Where does your spodumene fall?
This is just about the best you can hope for. I mean, if you talk to the converters, they will say is of everything they would like, it is this low impurity product that we have from this coarse grained crystals that we have. So the standard in the industry is the 6% concentrate, which we can certainly produce. I actually understand, talking to people like Keith, that you're actually better doing a slightly lower grade because actually you make more money on doing that. There's a small penalty, but you effectively get more out of the deposit. There's sort of a sweet number, spot number there. I wouldn't like to say what it is today, but I've seen sort of 5.6 is generally typically what people produce. But producing that 6% concentrate wouldn't be any problem for this plant at all.
Crikey. Now, we are out of time. I have to apologise to all the folks whose questions we just didn't get to, but I've got to say that was fantastic. I really, really enjoyed it. What an exciting project. You don't often hear about projects which are quite that exciting. So I'm sure everyone enjoyed it. I'd just like to thank you so much for joining us. Neil, it was only a few days ago we signed you up, and that was terrific. Sincerely very glad that you decided to speak with us. Thank you.
Thank you very much indeed for having us.